Once again, ladies and gentlemen, boys and girls, and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So let's jump straight into it. So this topic was brought to me. Shout out to Beef. He DM'd me on Instagram, said, Prince, I think this would be a great topic. How would you invest $1,000? Now, how would I invest $1,000? Now, granted, ladies and gentlemen, this is not going to be for everybody. Everybody's financial picture is different. It all depends on somebody's time horizon. It all depends on how much money not how much money you got, because we know how much money we got, but time horizon, how much risk you want to take, growth, all that stuff like that. So I'm looking at this situation and taking, hey, if I'm looking to invest for the next 10 to 20 years, I'm looking at investing for the next 10 to 20 years. I have $1,000 and I can stomach risk. How would I invest that? So this is the scenario that I'm doing for my particular self, because I'm investing for long-term growth with a nice bit of risk in order to get a nice return, right? So my portfolio, this particular $1,000 would be a little bit more volatile than if it was somebody else. So please don't DM me and say, Prince, why you didn't pick this, pick that, or whatever the case may be, right? So here we go. So in this video, we're going to talk about how I invested. I'm going to give you the 5 things I will put in my portfolio, and I'm going to give you the percentages of my portfolio, and I'm going to tell you why. All right. So the first thing, what would I buy? First thing I would buy one of the major indexes. You have the Dow Jones, you have the Nasdaq, and you have the S&P 500. Me, I will pick the Nasdaq because the Nasdaq is more technology driven, and over the last decade, yes, it had higher highs and lower lows, but guess what? It has major swings. But out of all the major indexes over the last 10, 15 years, the Nasdaq has ran up the most. So I'll put 22% of my portfolio in the NASDAQ. How would I do that? That would be via the QQQ. And the reason why I would do that, because I want a nice index. I'm going for the future. I want to be technology based. I want growth. And I would choose the NASDAQ out of the Dow Jones and the S&P 500. Now, the NASDAQ only tracks 100. Dow Jones tracks 30. S&P 500 obviously tracks 500. But that's why I would choose a NASDAQ. I would get one index fund, which goes for about $230 or whatnot, whatever QQQ goes for. I would have that. And I think, if I'm not mistaken, it does pay a dividend. I would have the dividend reinvested and hold on to that. That would be the base of my portfolio, right? Number two, I would go into this new industry. You guys and girls heard me talk about this industry a good bit. Cybersecurity. A lot of you guys and girls don't know about it. What is cybersecurity? Everybody is required to have some form of cybersecurity. Let's say banks got to have cybersecurity. The government got to have cybersecurity. Schools got to have cybersecurity. Corporations got to have cybersecurity, because guess what? Just pretty much our whole livelihood is online. And look at the recent events that we've had with the pandemic. It even showed you even more about people being online. So to stop people from being able to hack into Amazon, hack into Zoom, hack into Facebook, and do stuff, they have to have a whole cybersecurity world. And the thing I like about this industry, it's a growing industry that I think will dominate the market and within the next 5 to 10 years, because it is growing more and more and more in popularity. Now, if you're not online, I don't know what you're doing. I talked to a buddy of mine yesterday. Him and his dad have an amazing business, construction business, making millions of dollars a year, which is great. But they're not really focused on their social media, online marketing, or whatever the case may be. And I said, hey, you need to get online. That's number one way people verify everything. So cybersecurity. And if you're online, you got to have some form of cybersecurity or whatnot. And the thing about this industry is a lot of these companies are coming in debt free and making a nice cash flow. They're coming in debt free and a nice cash flow, and they're not paying dividends, but they're debt free, nice cash flow. Some of them are profitable. So if you're profitable, debt free, no cash flow, in a dominant space that's growing, I kind of like you. So 13% of my portfolio, I would at least get a share or two of a company called CrowdStrike or Fortinet. Now, let me give a disclaimer. CrowdStrike has no debt, but it's not profitable yet. It just came out last year. So I would go with FTNT, which is Fortinet, which is a profitable company. It has no debt, and it's in a dominant space, and it is the largest cybersecurity company out there, publicly traded company, according to total assets. So with me, second layer, 13% FTNT. Even though I believe CrowdStrike will become profitable here shortly and they're going to go to the moon. So, but I will go with FT Fortinet because just due to the finances. But I would like CrowdStrike as well. Next up, this one I kind of put banks. I put 25%. I said banks, but I'm also kind of torn. I would like to add a little Microsoft here. So I would go banks or I would go technology. The reason why I chose banks over technology because my QQQ, I already have a lot of exposure to technology. So I don't want to be over invested into an industry. But I really would like to put Microsoft here, but I can't do that because 23% of my portfolio, or 22%, did I say that right? 22% of my portfolio is already dedicated to a lot of tech companies. So here I probably would make a space for a nice, sturdy financial companies. The top two financial companies that are traded right now today is JP Morgan, Bank of America. JP Morgan is about $100 today. Bank of America is about 23, $24. So those would be my two companies right there. I probably would go with one, and it'd probably be JP Morgan. I'll probably choose JP Morgan. They pay a nice little 3% dividend. They're very undervalued right now. So I would choose them. So 25% of my portfolio I would put into the financial industry. Also, look at the industries that got hit the hardest in the downturn since the stock market fell. That was financials and technology. So my financial, JP Morgan, my technology would be Nasdaq, and cybersecurity also falls up under that technology space too. So I want to take advantage of those two. Don't forget, get your investor show mug in the description box below. Ever since I got this mug, man, reading financial reports has been a breeze. But anyway, next up, number 4. This would be my lottery ticket. Prince, what do you mean by my lottery ticket? My lottery ticket would be that no more than 10% of my portfolio would be dedicated to a company that is no more than 10% of my portfolio be dedicated to a company that is unprofitable but has a high upside. And right here, I kind of put Southwest there, which I shouldn't because Southwest is the number one airline according to total market cap, and they're profitable already. They're the most sturdiest company, but right now it's kind of up in the air if Southwest would go. But that's where I would put my Southwest Airlines or my Uber. Uber is unprofitable, but it's number one in a brand new space. And like I said today, I think Uber today looks like Facebook in 2013. Brand new space, number one in the space, dominating that space, and it has more profits. It was number one, dominating the space, first one in the space. Well, Lyft was like a month early, but you kind of catch my drift. So Uber right now it's about $30. Southwest Airlines about $30. One of those companies I would pick. The more financially sturdy company would be Southwest Airlines. The company that is unprofitable, pays no dividends, but has a strong possibility within the next 5 years to be over $100. Uber, right? So that would be my little lottery ticket. Like, this is the part where I would put my little spicy stuff or whatnot, whatever the case may be. So number 4, that would be my lottery tickets, Uber or Southwest Airlines, 10%. Now let's go into my last spot, number 5. Number 5, cash, baby, cash. 30% of my portfolio I would leave in cash, and I would leave it in cash to take advantage of downturns of the market. Cash is a great way to hedge the market. So guess what? It doesn't do any good if I buy this whole portfolio today, and let's say tomorrow the market pulls up March 20th of this year, where we fall off 10, 20, 30, 40%. The stock market takes a massive dive like that. I don't have money to take advantage of it. So if the market was to take a dive, look, I can buy some more Bank of America. I might be able to buy some more cybersecurity. I might be able to get into the Nasdaq at a cheaper, lower price. So I would keep a little money to the side to be able to snipe some of my wish list or my watch list. So I would have a little watch list on the side, companies that I don't have, but I'm watching closely. I may have a Microsoft. I may have an Apple. Amazon is too much for this portfolio, but I may have a list of companies that I wouldn't mind owning. Coca-Cola, I wouldn't mind owning. So I may set those off on my watch list. And if the market makes a knee-jerk reaction, I can utilize my cash to go in and be able to purchase. So number 5 would be 30% of cash. So now let's do a quick recap. Number 1, 20% of my portfolio will go to the Nasdaq. I would get the QQQ Nasdaq to cover that technology base. Number 2, why I keep saying 3? Why I keep wanting to say 3? But number 2, This would be, I would go into a fast growing, new, not new, but kind of new, the new industry that I think is going to dominate the future. The biggest company that's in that industry that has no debt, that is profitable, is Fortinet. FTNT, 13% of my portfolio will go to the cybersecurity world. Number three, this is a toss up right here. This is why I will go to the financials. When I go into the financials, I'm going to pick JP Morgan to put in 25% of my portfolio, right? Number four, this is where I'm going to put my lottery tickets to be able to see if it can knock it out the park. This will be my lottery ticket, probably be an Uber or a Southwest. Southwest has gotten beaten and battered. Great finances, but it's gotten beaten and battered for obvious reasons. But Uber is looking like Facebook did in 2013. Uber is that draft pick. It looks good, but we're going to see if you can make it. So this will be my lottery ticket that I put no more than 10% of my portfolio to. Now, number five. Number five, I would put, leave 30% in cash. 30% in cash. This is a way to hedge the market and be able to take advantage of the market in the future. All right. That's where I will put my $1,000. This will be a pretty aggressive portfolio. This would be a high risk portfolio because it's all stocks. Now, of course, you can get a piece of land, maybe a little hard to find, but you can buy a piece of land up under $1,000 if you look hard or whatnot, whatever the case may be. With real estate, maybe you can get into some wholesaling with $1,000. But we're just going to say we're just keeping it on the stock portion right here. There are even some business you can start with $1,000. You can buy a camera and some lights and become a photographer, right? But we're not going to get into business. We didn't get into real estate. We just kind of stayed on stocks. That's what I would divvy up my portfolio to. Y'all drop some comments. Let me know what y'all think. And until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. My name is Prince Dykes. This is the Investor Show. And that's Wesley behind me. Say hey, Wes. Hey. All right. Peace. Be safe. I'm out. Thank you.